Welcome back to Wake Up America. I'm Alex Kramer. Well, as you would expect, the world markets are fluctuating drastically amid the chaos in Eastern Europe. Already this morning, the Russian ruble plunged nearly 30% to an all-time low, and the Russian central bank has since raised its key interest rate from 9.5% to 20%. And futures here in the U.S. already way down this morning. Now, for the latest, let's bring in the Vice President of the Commonwealth Foundation and Fellow at the Independent Women's Forum, Jennifer Stefano, and business and market analyst and Newsmax contributor Seth Denson. Good morning to you both.
Good morning.
All right, so Friday's close had everything in the green, with the Dow gaining a healthy 834 points. This morning, futures falling 400 points. Jen, is there any surprise there?
Yeah, no, look, there is going to be continued volatility, and that volatility will include some upside to it. The economy is actually trying to do well coming out of COVID. But what you have is, if you look at the volatility index, if you look at the consumer sentiment index, is that you have Americans living in fear. Americans not believing that life is going to get better, not for our economy as a whole, and not for themselves individually, even though wages are up. And what they're looking at are things like inflation, they're looking at oil and gas prices, and they're looking at this current administration, and they are losing confidence, even more so than before in the Biden administration. It's down farther than it's ever been. And that does cause volatility, no matter how well the economy is or isn't doing.
Seth, I want to bring you in on this one. Are this morning's developments, are they surprising in your opinion, or could this be the result of the meeting between delegations in Belarus?
Well, I think you got to look at it from two prisms. The first is the daily investor. That's the average folks that are out there looking at the market, seeing what's happened. To Jen's point, they're looking at things like inflation and oil and gas and all that. Then you have the institutional investor. The institutional investor doesn't care about politics. We talked about it last week. There's no politics in money. It just doesn't care. And so these institutional investors are looking at facts. I think that while we're all optimistic of what these meetings will hold, at the end of the day, it's probable that not much is going to come out of them. And so the institutional investors know that. I think that's what you're starting to see in a little bit of the futures. But this is an important note to make as well. If you look at all of the volatility that we saw last week, the ups, the downs, the roller coaster we were on, the S&P, flat on the week. Absolutely flat.
Okay. Well, Jen, on Sunday night, oil prices surged as high as $105 a barrel. And with the Nord Stream 2 pipeline shut down, how high will oil prices rise, and what does this mean for the everyday American?
Right. They once said that oil would never go over $100 a barrel. We're seeing that start suddenly to change. Remember, the United States once had energy independence in 2019. We had finally achieved it. But under the Biden administration and their energy policies, we have shut down opportunities for the Keystone Pipeline. Furthermore, this administration has leaned on the investors in fossil fuel companies to not invest. At the same time, you have the CEO of Blackstone coming out and saying that they can't get any financing, that banks are withholding financing. So you see, just in the United States alone, we're going to have trouble producing oil for our own people. Meanwhile, we're dependent on foreign oil. 7% of our crude oil comes out of Russia. Canada is probably our #1 exporter of oil into the United States. But of course, half of their energy that comes from Quebec and their Atlantic territories is from foreign countries, and guess which one of them is? Russia. So this is all going to come down under the heads, not just of the American consumers, but American businesses and manufacturers, and they are really the ones, along with the increase in the producer price index and the cost of goods, who is really going to suffer here.
All right, well,
hey, Alex, real quick, the Nord Stream 2, by the way, it wasn't operational, and so as of yet, and this story isn't really being talked about. The Nord Stream 2 was really emphasized to bypass the pipelines that run through Ukraine. Russia has to pay Ukraine for the use of those pipelines. And so Nord Stream 2 there was two aspects of it. One was to bypass those, but second was to get more energy where needed. And so as we're looking at these fuel futures and gas futures and oil futures increase, nothing really to this point has been greatly impacted. This is speculative increase. But if the U.S. were serious about ending this conflict tomorrow, we could turn on the switch and flood the market with energy. This deal is done. It's over, but we won't do that.
Okay, so Seth, after you said all that, is it now time for the U.S. to start stepping up its own energy production right now?
The best time to plant the tree was yesterday. But listen, the second best time is today. So, yeah, absolutely. If we could, let's flip it on. I don't see a change in the Biden administration, unfortunately. I wish we would. But, yes, we need to flip that switch and pump energy, not only for our own self-interest and our own national security, but, quite frankly, to become the energy exporter of the world. We're right now a net importer, and that is wrong.
Okay. All right. Jennifer, switching gears a little bit. President Biden is taking steps to cripple the Russian economy, and major banks in China have even restricted lending. Now, as I mentioned earlier, the ruble is down astronomically. Now, what does a hit like this do to Russia's economy, and can it bounce back?
So I think the thing that you have to look at is what I think the United States doesn't want to do is end up where we were after World War I, where our allies, Britain and France, so crippled the German economy that it made it unable to in any way rebound or recover. And this led to continuous situations that led to World War II. I think you'll see that the sanctions that President Biden has levied thus far on Russia aren't all that they could be, aren't all that the ability that we could. And I think part of that is, A, to give us some opportunity and wiggle room, but B, to make sure that you are not totally crippling Russia so that you create a longer-term problem. Now, this is really tricky because we have to solve the problem at hand. But of course, and I think to what Seth said, a lot of this could have all been avoided. You realize Vladimir Putin didn't do this for a number of years, and he could have. Why is he suddenly doing it today? And when the United States does not project strength, when it is not strong, when it lifts sanctions, when it should not have, you create opportunities for guys like Putin to do what he does. And he is becoming a pariah to the world.
Great point, Jennifer. So we got to go, but thank you so much, Jennifer Stefano and Seth Denson. This is obviously something that we will be taking a look at in the next coming days, next coming weeks, a very important topic. So thank you.
Thank you.